Suyash.
Yes, Shweta. So Indian market snapped its 3-day losing streak, and it seems like the negative trend, it has bucked the negative trend in global equities, and the markets ended higher at about 0.7% in today's trade. Now, at close, Sensex was up 0.74%. At 65,721 levels. It touched an intraday high of 65,799, so just shy of 65,800 mark, and an intraday low of 65,387 levels. Now Nifty jumped about 0.7% at 90, and it claimed back the 19,500 levels in today's session. It touched an intraday high of 19,538 and an intraday low of 19,436. The momentum, the bullish momentum was seen across the board, as was in the case with small cap and mid cap stocks, with Nifty mid cap 100 ending 0.82% higher and Nifty small cap 100 ending 0.76% higher. So now it seems like, Shweta, the impact of the Fitch downgrade has been priced in, and investors are once again focusing on the positive macro numbers that are coming in, and the earning beats by the index heavyweights.
All right. Also joining us on the show at this point is Avinash Gupta, who's the Director Research of Profit Mart Securities. We'll get Avinash in just a bit. But before I move to Avinash, I want to understand from you, what were the top gainers and losers on the street today?
So, Shweta, Cipla, if you can pull up the graphic for the top gainers. So Cipla today posted 3.53% gains. Now this was on the back of reports that Blackstone, which is the world's largest private equity player, will buy the entire promoter stake of 33.47% in the company by as early as next week. IndusInd Bank, Tech Mahindra, Wipro and Bharti Airtel also posted a solid set of numbers in a broad-based day of buying for the Indian markets. Now among the top losers was State Bank of India, which disappointed the streets with its quarterly earnings. Although it did beat, now we'll get back, I know we'll get to it, although the company did beat on the profitability front, but when we dig between the numbers, you will see where the problem was for the investors. Okay. Now, Bajaj Auto and Maruti were also among the top losers, and it seems like it was a broad-based selling for the auto index today, as the auto index was among the top losers in today's session. Now, if we can also have the sectoral indices, most sectoral indices in today's session ended with positive gains, barring Nifty Auto and Nifty FMCG. As you can see over here, Nifty Auto saw some profit booking and ended 0.33% lower. FMCG was down flat with a negative bias. Nifty IT posted a solid set of gains today, rising about 1.55%. Private Bank was up 1.25%, and Nifty Bank was in line with the market and rose about 0.82%.
It reminds me of what Kranti said yesterday, and he said it's a slight correction. Don't confuse it with bears running or bears taking the markets down, and that is what we are looking today. So it was 3 days of profit booking. Markets
for sure, Shweta. So
once again up today.
Yes. So since March of this year, the markets have been on a rally, right? And the markets had shown signs of exhaustion at higher levels, and that was the case also that we saw in the case of FIIs, foreign institutional investors, who had been net sellers, but at the same time domestic institutional investors have been lapping up Indian securities, and the magnitude of their buying is actually far superior than the magnitude of the selling of foreign institutional investors. So, and also the earnings have been largely ahead of expectations, and so the Indian markets, it seems, is doing fairly well.
All right, Avinash is joining us at this point in time. Avinash, how are you reading?
Filch for the US economy was a short-term knee-jerk reaction, which was felt in the markets for the last 2 days. And I think today markets have bounced back largely because, markets are more data-centric. Markets are looking at numbers which are going to come in the future, so forward-looking. And that is why I think markets have now decided that what is old is old. I think they have to move on. And I think if you look at the positive data points for the Indian economy, one is basically the corporate numbers for Q1 of FY24 have been very encouraging. Almost 9 out of 10 companies have come out with positive management commentaries. The numbers have also been good. And I think on the macro data front also, I think, inflation seems to be cooling off. The trade deficit is well under control. GST numbers are stabilizing. So I think all said and done, the markets are now looking at far more, important data points coming forward. Of course, the result season will continue to have a bearing on specific stocks. But I think recently the Morgan Stanley report also pointed out that they have downgraded China and Taiwan and upgraded India. This also is going to facilitate a lot of FI inflows in the Indian markets over the next, say, 6 to 12 months. So I think all said and done, the markets have recovered, and I think we could see higher levels in the coming week.
All right, so it appears, Suyash, that Fitch downgrading US and US economy, all of that was a temporary factor. Micros are looking strong for India, hence markets are also reacting in a similar fashion. But before we delve deeper and get Avinash back, I want to understand from you and move on slightly to corporate earnings, because that's also driving markets in a way. Today, SBI came up with its numbers, very complex set of relationship between how the stock is performing and how the numbers turned out to be.
Yes, Shweta. So SBI reported a healthy profit figures for the quarter ended June. However, weak loan growth disappointed the street, and as a result, the stock tumbled almost 3% in today's session and was a top loser in today. Now, if we can have the numbers of SBI up on the screen. So SBI posted, yeah, there we go. SBI beat the street's expectations of about a 150% rise in net profits, and it posted a 178% rise at about 16,884 crore. Although the profit figure, the PAT figure, was aided by non-recurring treasury gains of about 3,047 crore. So if we remove that number, it is largely in line with what the street was expecting from SBI. At the same time, if you are talking about what the good part of the result was, the gross asset quality continues to improve. Now the gross non-performing asset ratio continued to decline, and it declined by over 1% to 2.76% in this quarter compared to 3.91% in the year ago quarter. Now at the same time, net non-performing asset ratio has also moderated by about 29 basis points from 1% in the year ago period to about 0.71% now. Now let's talk about what was not so good and what led to the crash on the street. Now, net interest income, which is essentially the difference between interest earned and interest paid, was below the street expectations, and it came in at about 24.71% compared to the expectation of about 26.7%. Now net interest margin was up 31 basis points at 3.33% in Q1 FY24 versus 3.22% in Q1 FY23. However, on a quarter-on-quarter basis, it declined by 37 basis points, which, Shweta, is the highest quarterly sequential decline in nearly 6 years. Loan growth was another big concern, as loan growth was just about 1.05% on a quarter-on-quarter basis, which was the weakest loan growth in 7 quarters, and it was well below the industry standard. I think that is that's the reason why the investors decided to book profits, and as a result, the stock tumbled about 3% in today's session.
All right, I'm not sure if Avinash is with us at this point in time. Can we know if Avinash has joined back? Okay, Avinash is not with us at the moment. So a stock tumbling there by as much as 3% on the back of the fact that it's sort of a mixed bag for SBI, come to think of it. Gross NPAs are on decline, asset quality is increasing. Markets perhaps not, and investors perhaps not very happy with the fact that the revenue has declined, solely on the back of the fact that the interest that bank SBI is paying out is way higher, from what I understand, as opposed to the interest that they are earning, all of which due to a high interest rate regime.
Yes, Shweta. So if you also see, the profit beat was, 3,800 came from non-recurring treasury gains. So it was a one-time profit. If you remove that effect, it is actually below the street's expectation of about a 15,000 crore rise in net profits. And when we are talking about, like, the asset quality has certainly improved, but that has been the cases with all the private sector banks and the public sector banks. But one of the most concerning things about SBI's quarterly performance was its weak loan growth, and it fell to a 7-quarter low in this particular quarter, in the June quarter.
All right, Avinash is back with us. Avinash, how are you reading these results for SBI particularly? Yes.
Little bit of disappointment on the loan growth, which I know your colleague mentioned, and plus I think the markets were little concerned about the fact that the balance sheet is yet not, as good as what the market expected. If you look at the other PSU banks like Canara Bank or typically the smaller banks like Central Bank, the slippages number was also limited. Plus, the loan book growth was in fact more robust. What was more positive for SBI in this quarter was the increase in the profitability, but this profitability has been largely driven by the other income factor. Now, this is something which the markets were not very happy about. Core profitability has been more or less, grown at a very steady pace. And I think the markets were expecting a market leader like SBI to deliver very strong numbers on the operating metric front, which did not happen. So I think net a little disappointing number, but I think we'll have to wait for the management commentary post the results and what kind of outlook the management shares for the second half or for the third quarter of this financial year. I believe that at around 550, 560 odd levels, if the stock corrects sharply, I think it will be a good opportunity to accumulate it, because we believe that SBI is a story which is a story on the manufacturing sector and on the economy in general. And I think any uptick on the macro numbers side will obviously be capitalized by a bank like SBI. So typically on a standalone basis, the core business has disappointed, but I would believe that we need to look at the management commentary and then take a call. At the current level, I wouldn't suggest a sell, but at the same time, a fresh buy could happen only once we get to hear the management commentary and take a fresh review.
All right, so analysts, of course, waiting for management commentary, wait and watch as far as SBI is concerned. But moving on to another important story and corporate earning that we're tracking, and that is by the way of Mahindra and Mahindra, Suyash.
So Mahindra and Mahindra came out with a good set of numbers. It did beat the street's expectations on both profit and revenue front. Now profit, Shweta, almost doubled at 97.6% year-on-year rise to 2,774 crores. Compared to about 1400 crores in the year ago period. Now this was on the back of a rich product mix, upbeat growth in the SUV segment, also the increase in the average selling price of its offerings, and softening in the commodity prices helped Mahindra post such a massive beat. Revenue jumped about 23%. Now these are standalone numbers, mind you. So 23% jump in the standalone revenue for Mahindra and Mahindra the figure came in at about 24,368 crore versus 19,813 crores. In the year ago period, the revenue figure was about 20,000 crore, and it is much ahead of expectations, and the street had expected about a 20% rise in revenue, so we saw a 23% rise. So on both net profit and revenue front, Mahindra has exceeded street's expectation, and the stock also reacted positively but saw some profit booking, as was the case with most auto stocks, and ended about 0.4% lower in today's session.
How are you reading, Avinash, the net profit rise of 97.6%? Those are phenomenal numbers.
Yeah, I think numbers for Mahindra and Mahindra have come in ahead of street expectations. I think what is important to note is that on a standalone basis, both the revenue and the EBITDA has increased significantly. In fact, one good part is that in their electric vehicle business, Temasek is going to take a large strategic stake. In fact, this factor is also a big positive for the company, because on the electric vehicle side, the company has mentioned that the next 2 years are going to be very important for them. My sense is that both the auto business and the tractor business are going to show slightly better performances, considering the fact that now the Indian economy has grown significantly. We expect better numbers from the agri sales also, looking at the good monsoon. So overall, I think we could see that FY24 you could see an earnings growth of at least 18 to 20% compared to what they reported last year. So I think even at these levels, despite the fact that the stock has seen a little bit of profit booking, I would believe that the fair value could be anywhere between 1600 to 1650 over the next 12 to 15 odd months.
All right, and the Mahindra and Mahindra story, in fact, we discussed just this morning. Mahindra and Mahindra, in fact, Tesmac is set to infuse about 1,200 crore rupees. M&M going big on its EV plans. Currently has a rich product mix, but is hoping that by 2030, which is the deadline that everybody set for themselves, their EV portfolio will be approximately 20 to 30%. Avinash, would it be right to say that EV is going to be a major driver for all auto stocks, all auto companies in years to come?
Yeah, definitely. See, I think
looking at Eicher Motors as well. Eicher Motors also planning to now, and they came out with their results yesterday. In fact, very good numbers for Eicher as well.
No, I think as far as Eicher Motors is concerned, I think the introduction of Harley Davidson by Hero Motor or typically Triumph by Bajaj Auto does not seem to have impacted their sales. And I think the management also commented very clearly that they would be protecting their market share very strongly. As far as Mahindra is concerned, I think, see, the electric vehicle business is going to see a significant ramp up in the next, say, 2 to 3 years. I think with a lot of money coming in this business, they're going to obviously do a lot of marketing, a lot of new product launches. And I think the markets are also looking forward for such products. So I think electric vehicles is now going to be a theme which is going to get traction here. So that's going to happen with almost every large manufacturer, whether it is Maruti, Tata Motors, Mahindra. Almost every manufacturer is gunning for strong growth here.
Avinash, Mahindra stock reacted positively to the earnings. It moved upwards, but then we saw profit booking in the last hour or so. Now, what I want to understand is that, is it just profit booking, or are we missing something, at least if you're looking at the numbers? Essentially, what I'm trying to ask you is, why did the stock price fall?
Avinash, can you hear us?
I can hear you.
Yes, I think what my colleague Suyash here wanted to ask is, what led to the stock price falling?
Despite such a good set of numbers.
Okay, despite such a good set of numbers, my colleague Suyash wanted to understand, why did the stock end up in red? Good numbers there, good margins, great profit. What really happened? Is there more to it than what we are reading in numbers?
No, I think, see, normally when the results are announced, I think in today's times, the numbers are hardly relevant, because the stock price has started moving ahead of the result numbers. So I think, now since the numbers have been out, there is no further positive surprise. So I think this is a fact with almost every company. Whenever the results are declared, we find that some amount of profit booking is done by some participants, and obviously then the stock settles down. We'll have to wait for the management commentary and the conference call, which is going to happen today at 6:30. And after that, possibly in the coming week, you could see another uptick, because markets are always going to be impulsive. They react very strongly and react very quickly to numbers, and obviously some profit booking happens. But if the management commentary in today's con call is very encouraging and some growth numbers are shared, then I think you will see a good uptick in the coming week.
So for an investor, as you just said, the analyst con call will be is later today. What are some of the things that we should track?
No, I think first of all, on the volume growth kind of guidance for the automotive business and for the tractor business is very important. Secondly, on their electric vehicle strategy, what kind of investments is the company going to make over the next, say, 2 years? And thirdly, the impact of the monsoon. The monsoon have come late, but they have come in now with a strong vigor. So I think, what kind of impact would it have it on their tractor business? Because since they are market leaders, will it actually lead to a much better growth than what they had earlier anticipated? Because earlier, Mahindra was talking about a mid-teen kind of growth for their tractor business. But now, since the monsoons are good, hopefully if this number becomes 12-13% in a year, then I think what kind of impact it would have on the volumes and the profitability. Because mind you, the tractor business is much more profitable than the automotive business. So I think all these numbers will be very importantly monitored by the analyst community today, and we'll be waiting for the management comments here.
All right, those of course are the big earnings that we're tracking this afternoon. And what other earnings are expected to come out later in the day, Suyash?
Shweta, one of the key earnings that we will be tracking is, of course, Britannia Industries. Apart from that, Alembic Pharmaceuticals, Fortis Healthcare, Bharat Dynamics, Bharat Heavy Electricals, and Gujarat State Petronet will also.
And Delivery.
Delivery is also, the stock was up about 5%.
About 5%.
Eagerly awaited the results.
All right, stocks are eagerly awaited. Avinash, thanks very much. Suyash, thank you very much for all your inputs on that interesting, important story. We're going to move on for now. S&P Global has projected the Indian economy to grow by an average annual rate of 6.7% by March of 2031. The growth will be driven by manufacturing and services exports and consumer demand. S&P Global expects the size of the economy to reach $6.7 trillion by 2030 from $3.4 trillion in fiscal year 23, and per capita GDP is also expected to rise up to $4,500. Now, brokerage firm Morgan Stanley also recently, remember, upgraded India's status to overweight. It is of the view that the country is poised for substantial and sustained economic growth at a time when the rest of the world is slowing down and short-term challenges weigh in form of rate hikes, and of course global economic uncertainty, India is poised to grow, and that of course is the word coming in from various brokerage firms. Krishna Kumar joining me in the broadcast at this point. Krishna, good afternoon. Positive trends coming in. If you look at what S&P has said, Morgan Stanley has said, all of it in positive territory at the moment.
And two things that are happening over here. One is that this is when they say they've upgraded India's to overweight, they've simultaneously downgraded China as well. So in a sense, as far as the global order is concerned, what this essentially means is that Morgan Stanley at least says is that India is in the beginning of a long boom period. You're looking at the next decade or two of growth in India, the kind that China witnessed from the 90s up until now. So India is at the beginning of this huge growth boom, growth curve, whereas China could very well be at the end of that growth curve. And that's the reason why they've been downgraded from overweight to underweight, to equal weight. Now, India, incidentally, just months before was upgraded from underweight to equal weight. And now, within months, it's gone from equal weight to overweight. So what does all this mean? First, when India was upgraded from underweight to equal weight, it meant that Indian economy was resilient to the pandemic. So Indian economy showed greater resilience to the pandemic than a lot of other economies. So you can bet on that and you can invest in that economy. That's why that upgrade was given. Now this upgrade from equal weight to overweight is a projection into the future, really. If you're looking at an emerging market to invest in the world, India is right now on top. India is the number 1 emerging market to invest. It was at number 6 and now it's at number 1. And the economy itself has been upgraded from equal weight to overweight. So it's a double positive. And also, most importantly, we're not at the peak yet. What this means is that we are at the beginning of a peak. So good times to come, to put it simply.
All right. Vivek Kumar, who is an economist with Quantico, is also joining us. Vivek, is it fair to say what my colleague Krishna here basically alluded to, that we are at the start of the peak, good things to come, macros looking strong, a global brokerage firm, a big investment bank, both in fact weighing in on India's growth story?
Thank you for having me on the show. So yes, things are falling in place as far as India is concerned, and I guess what you said in terms of how brokerage houses and some of the global investment banks have been looking at India from an investment perspective, what they essentially do is look at one investment center or one country vis-a-vis their other basket, and within that basket, India is kind of standing out in terms of performance. So what is making India stand out? In our assessment, we focus on macroeconomic stability. So if you take a consolidated view of 3 years, how has the performance been since COVID? So 2023 over 2020, cumulatively 3 years. India probably has been one of the countries where, on a cumulative basis, the damage to the economy has been lesser, and the resurgence, or let's say the revival part post the damage, has also been quicker. So that's one thing. The other part is that while most of the other economies have also seen that V-shaped recovery like India has, most of the other economies are also paying a price in terms of extremely high inflation. It's not that India has not had its own share of high inflation. India also saw its own share of high inflation. But on a comparative basis, we were kind of talking about a 6% inflation as being high in India. In some of the other peer countries, especially developed economies, inflation touched 9 and 10% vis-a-vis their own target of 2%. So there was a nearly 4 to 5 times jump in inflation, whereas in our case, inflation did not even go 2 times of what the target was. For us, the target is 4. We probably at our peak, we would have been at a 6 to 7% range. So we were short of inflation being twice of what the target was. We did not see extreme amount of loosening of fiscal strength as we saw in case of some other countries, especially the developed market economies. And that is probably the root cause of why inflation is taking such a long time to decelerate in those economies.
Right.
We also use this opportunity to push forward some of the structural reforms. The COVID times, we saw a huge amount of policy focus on Atmanirbhar through the PLI scheme. we use this opportunity to push forward the agenda to make investments in India as well as make for India.
Right.
So that is kind of showing in some sense
Vivek?
electronics exports. Yes.
Right. I want to ask you something. This is happening in the backdrop of Fitch downgrading the American economy and the American markets as well, and then China being downgraded to equal weight as well. So, in that sense, is it India and sort of hope and faith in the Indian economy, coming from the lack of faith in the others?
So the Fitch downgrade of US, if you look at it very objectively, then this is something that should have happened at least 12 years ago when the S&P downgraded that. So in case of US, the country enjoys exorbitant privileges as far as their central bank is concerned, as far as their treasury operations are concerned. And that probably is the reason why the rating agencies have been so slow to react on US vis-a-vis other countries. Any other country in that position would have been downgraded much earlier than the US. So that's a completely
well, to be fair, debate. They have a 4% inflation, 4% not inflation, and their target is 2% inflation in the US.
We are at 4.8, ours is 4. So
inflation is elevated, but yes, it's now falling back towards targets. So now they are close to 3.5% levels. Within a year, they'll get to 2%. But the larger question is of debt in case of US. And I think more important is China from from the perspective of the argument that you are making, because China and India are being looked at as cyclical growth recovery centers. And within this space, India has surprised positively, whereas China has disappointed. So if I can take you back 6 months, somewhere around December, when China was reopening from all the COVID restrictions, that was probably one of the last countries to do that. And there was an optimism surrounding China reopening. So China is going to reopen, it's going to provide a boost to global economic growth, etc., etc. So commodity prices had begun to rise, keeping into account this reopening of China. Now it kind of fizzled out very quickly. That expectation fizzled out very quickly. In fact, some of the leading indicators, if you look at China, whether it is GDP or more recently the PMIs which have come out from China, they are painting a very somber picture. Whereas if you look at some of the leading indicators like PMIs for India, I believe the services PMI touched a nearly 30-year high in the month of July. On the same side, while manufacturing did show a moderation, but nevertheless nearly 56, 57 on the PMI manufacturing scale is pretty high, it's pretty elevated for India, and I believe it is to be correct, then India probably stands out in terms of both manufacturing PMI and services in amongst all the countries in the world in the month of July. So India is a clear outlier. So it is denoting the cyclical outperformance of Indian economy vis-a-vis the expectations what were at the beginning of the year. US is a completely different case. As I said, they have much more larger issue on debt management as of now, and it's a completely different debate. So I would not compare India with US, but India with China definitely. So on one end you have a disappointment, on the other end you have a surprise, which has been very very positive.
Well, we're reading a lot into these numbers. S&P also says that India is likely to grow to $6.7 trillion an economy by
2031.
By 2031. Those numbers are still not in line with the government estimates.
No, I think they're pretty much in line, because even the government data suggests that for India to become, let's say, a $6 trillion economy by 2030, India needs to grow at 7.6%. Similar data also from IMF or World Bank, one of the two, I don't think both. That's the whole question, and that's something I want to ask Vivek, that, how realistic is it to expect? See, China plus one is okay. Manufacturing shifting from China coming to India, China's contraction on PMI, India's expansion on PMI, great. From a comparative standpoint, it looks very good. In absolute terms, growing at 7.6% is not easy. We haven't seen that number in at least 5 years.
And in fact, S&P also says that what their estimation is 6.7%. They're still not at 7% figure. Nobody is at a 7% figure.
So I'm saying, are we too optimistic saying that we have the potential to grow at 7.6%? Are we too optimistic that all the factories of the world from China will eventually shift to India? Are we not reconciling the fact that there are other emerging markets like Vietnam, like Thailand, like Philippines also in the fray, both from a manufacturing and a services standpoint? So how realistic is it for India to grow at 7.6% when we want to become the third largest economy by 2030? A developed economy by 2047, to have that sustained momentum of 7.6% growth year on year. Even 1 year of missed target increases the catch up by many additional basis points. So I think the whole debate has to actually shift to looking at absolute value in India's growth, absolute value of India's economy, because the comparative does not tell us the whole story.
Okay. Let's get that question and throw it up to Vivek. Vivek, how practical and feasible are these targets? I mean, they look very good on paper, 7.6% sustained growth in order to be a $10 trillion economy by the turn of the decade, which is 2030.
6 trillion, I think, by 2030. 6 trillion by 2030, developed economy by 2047.
So how feasible, practical are these numbers? Are we not taking into account that there is, of course, a race here, and it's not just India is not the only country that features in China Plus One. There is Vietnam, there is Thailand, there are other Asian economies that are also competing hard.
So, to be fair, I would not be able to comment about what S&P has said in terms of their forecast, because I haven't read their report. But yes, a lot of numbers do keep floating around since the 5 trillion number was first rooted from the government side. Now, we need to differentiate two things here when we are talking about the size of the economy and the growth rate. So when we are talking about the dollar GDP, then we need to look at the nominal GDP rate rather than the real GDP rate. So nominal GDP rate, let's say currently you are close to $3.5 trillion, and even if you are on an average basis able to manage 6.5% GDP growth, and let's say 4% you have inflation, give or take 0.5% on a year-on-year basis. So 6.5 plus 4% gives you you land at 10.5%. So on a sustainable basis, if I can give you a band, then 10
Vivek,
to 11%.
I'm sorry, I'll have to cut you short. Rahul Gandhi is speaking with reporters at the moment. We'll just cut to that first.
जैसा कि मैंने आपको पहले ही बताया है, पहले कांग्रेस अध्यक्ष कुछ बातें कहेंगे, आपके समक्ष रखेंगे, उसके बाद कांग्रेस अध्यक्ष, पूर्व कांग्रेस अध्यक्ष और हमारे जनरल सेक्रेटरी संगठन के केसी वेणुगोपाल जी वापस तमिलनाडु की मीटिंग में जाएंगे और ये प्रेस कॉन्फ्रेंस अभिषेक सिंघवी जी और अधीर रंजन जी लेंगे। आपके सारे सवालों का जवाब सिंघवी साहब और अधीर रंजन जी देंगे। तो पहले मैं गुजारिश करूंगा कांग्रेस अध्यक्ष को कि आपको संबोधित करें। माननीय मल्लिकार्जुन खड़गे जी।
राहुल जी, वेणुगोपाल जी, सिंघवी जी, जयराम रमेश जी, आदिर रंजन चौधरी जी और सारे मीडिया के मेरे दोस्तों, आज बड़ा खुशी का दिन हमको लगा कि डेमोक्रेसी की जीत हो गई, संविधान की जीत हो गई, सत्यमेव जयते जो हमारा नेशनल सिंबल के नीचे लिखा हुआ रहता है, वो उसका जीत आज हुआ है। इसलिए हम सारे लोग खुश हैं, शायद आप भी खुश होंगे।